The Rebel Capitalist Show.
A fun thought experiment, and I'd love, since you're such a big fan of Jim, he's my favorite investor. What do you think he would do if you had to put $5 as to what Jim would do or is doing maybe right now with this Russia situation? What do you think?
Well, I thought about him because he always goes into those most, those situations where as soon as you hear the idea, you go, has he lost his mind? And
Yeah.
and that's how I felt honestly buying BP stock. I was at a golf tournament at the time with a bunch of brokers, and we were talking about markets, and they said, well, what are you doing in the market? And I said, I'm buying BP, and they all like dropped their lunch and looked at me like, are you crazy? And I thought, I need to go buy more, right? Because that's the reaction that you want, that tells you you're getting a good bargain. But I'll say, I don't know. I would be surprised if Jim were buying Russian stocks. I think, one of the things that concerned me about the trade is when you look at the history of modern history and the losers of wars, the time to invest in those countries is after the war's over and they're in that rebuilding process. So I think that if I were to take a look at it again, it would be probably from that standpoint, because it doesn't look like Russia's winning this war. And even if they do accomplish what they're trying to in Ukraine, the costs to their economy and things. And it's been surprising to see so much unification of the rest of the world. Even China seems like they've kind of flipped from supporting Putin and being on Russia's side to now saying, wait a second, we can't afford to be shunned by the rest of the world like is now happening to Russia. So I think, from that standpoint, I'd probably be looking at something from the standpoint of after things, all kind of play out. The only time to invest in the loser of a war is probably after their rebuilding has gone, process has begun.
Well, let's go back to another thing that Jim has probably taught both of us, either directly or indirectly, is you wait for a catalyst. Remember, he always would wait for a catalyst. He would look at, I remember him having the discussion, I think it was the German stocks back in the late, or maybe the mid 70s or something was happening with Germany, or maybe it was the early 80s. And the German market hadn't gone anywhere for like 10 or 15 years.
Yeah.
And he went in and bought a lot of German stocks. And Jack asked him, why did you do that? And he says, well, because it's cheap. And then Jack said, well, Jim, you could have made that argument 15 years ago and you'd be sitting on the money for 15 years. So what's different? And he says, well, that's a good point. He said there was a catalyst. And what happened is there was some sort of election in Germany where there was someone, I think that was very pro-business, that got elected. And Jim said that he listened to his speeches and he believed that the guy was legit and was actually telling the truth. So when that guy got lit, or maybe just a couple of days prior, Jim went in and bought everything because he believed he was going to get elected. And then he believed that he was going to follow through on some of his promises that would take those stocks just from dirt cheap. Now, no one's paying any attention to them, to something that everyone now is excited to buy. So I think that's maybe what you're saying with the Russian stocks is they're cheap, put them on a watch list for sure. But then Jim might wait for a catalyst to buy, even if it's at a little higher price.
Yeah, I mean, that's a really good point, because obviously a ceasefire could result in a huge rally in these things, not even an end to the war. And I'm not saying the trade's not going to work out. I mean, you could buy Russian stocks today and it could work out great. But yeah, the catalyst is an important point, right? I mean, what is going to put a bottom in these things? And, it could be even just a technical catalyst too, because you look at Japanese stocks peaked in 1990 and have been terrible to own since then, until several years ago. And I remember 13D Research put out a piece when those stocks were technically starting to break out of a long-term base. And that was a terrific sign that it was time to go back into Japanese equity stuff. Yeah, they had been cheap for a long, long time. But they've been cheap for a good reason, which is, kind of how value traps work, right? I mean, you find things that are cheap and they get cheaper or stay cheap because they lack that catalyst. But, you could point to a macro catalyst, or you can just, look at the chart and see, what, this base is finally starting to break out. And that can be another, catalyst or trigger to be a signal that, okay, now it's finally time to get back into these things.
What comes to mind there is uranium, because and you've followed this more closely than I'm sure, but it goes way up in the last commodity cycle. I think it peaked out in 2011, maybe 2012, something like that. It goes way up to, what was it, 120, 130, 140, and then just crashed down. And then when it crashed down, everyone's saying that it's dirt cheap, but they're saying that for 8 years or whatever. Right. And then I remember back in March of 2020, it got even cheaper because of the COVID and whatnot, the lockdowns, and everyone's selling everything. And but then it really started to go back up, and then we've seen it spike and then come back down a little bit. But how were you following that, and did you get involved there? And if so, was the catalyst a fundamental catalyst or a technical catalyst?
Yeah, I never got involved in uranium. I'm still not involved. And that just brings me to one of my most important catalysts. And it was something that I couldn't have in the Russian stock market because I don't even know a way to track it. But one of the things I track most closely is insider activity. What are top executives at these companies doing with their own shares? And I track this on an individual stock level and on a macro level. I mean, the total US stock market level. And so for me, whenever there's something that I find that looks cheap in individual stock, I'll look to see what the insiders are doing. If the CFO is not going into the open market to buy money with his own, buy shares with his own money, then why should I, right? I want these guys who know the business. I mean, no matter what I do, I'll never know the business as well as CEO, CFO, VP of, all these different things, sales. And so when I think a stock's cheap, I'll look, and if the insiders are all selling, then I better go back and do my homework again and say, what am I missing here? Because if these guys don't see the opportunity, why should I? So I never found an opportunity in uranium where I found a stock that had compelling insider buying and the insiders were telling me it's time to trade this thing. Now, on the other side of the equation, back in the fall of 2020, and still to this day, but especially in the fall of 2020, just a few months after the oil price went negative, we had insiders buying energy stocks hand over fist, right? It was right around the time too where the Dow Jones Industrial Average kicked ExxonMobil out, I think, in order to add Salesforce. And you look at the performance of those two stocks since then, and Exxon has been straight up, Salesforce has been straight down. And so, I mean, you get those types of wonderful contrarian signals, and they're fantastic, especially when they come on top of something like, Harold Hamm, and during that third quarter conference call for Continental Resources, or second quarter conference call in 2020, was saying the stock is incredibly cheap. I'm stepping into the market to buy $100 million in the open market, and I'm going to keep buying with my own money until I don't think the stock's cheap anymore. And he's been buying, $30 million here, $20 million there, and you see this across the energy sector. And so to me, that's something where I can come in and I can say, ESG has essentially created this structural dynamic where money's just not going into the energy sector. It's becoming cheaper and cheaper. And from a capital cycle standpoint, the underinvestment in oil over the last 5-6 years has been huge, which is bullish for supply demand, which we're seeing today. But also, the investors have shunned the sector because of their kind of blind adherence to the ESG mandates. And so when you kind of come up with a thesis like that, and then you see insiders step in and buying hand over fist, PBF Energy is another one, refiner, where the insiders have been so prescient there. I mean, they know how to time their shares. When you see them, across the board, the whole, executive team step in and start buying stock, to me, that goes, okay, this is an interesting opportunity. And the smartest of smart money is putting their money where their mouths are. And so that for me is a catalyst that is absolutely crucial to what I do. And we can talk about it on the macro side of things too, but on a micro standpoint, it's like I said, it's crucial.
Yeah.